Hey guys, this is Andrew from Trading Mastery and welcome to today's trading tip. I want to talk about earnings and share price appreciation because they go hand in hand. Right now, we are in the midst of the third quarter earnings season for US companies. And right now, we're seeing them beat expectations. 80% of the businesses listed on the S&P 500 that have reported earnings so far have beaten expectations. And we had a pretty dour September, and the first week of October was a little bit negative as well. But since earnings season has started, and since these companies have been beating earnings expectations, share prices have gone through the roof, and we're now back heading towards all-time highs on the S&P 500 and the NASDAQ. And my message today is really simple. Share prices follow earnings. And if we continue to see over the course of the next 2 or 3 weeks, earnings of S&P 500 companies and NASDAQ companies beating the market's estimates, then we're likely going to see this Santa Claus rally that we often see all the way through until Christmas. The third quarter is historically the best quarter of the year for earnings. And when we see a S&P 500 rally of more than 10% in the first half of the year, the probability is 100% of the time previously, the share market has finished around 5% higher. And right now, we've got earnings coming out and they're super strong. So this week, keep an eye out for earnings of companies such as American Express, Netflix, Cleveland Cliffs, which is essentially an infrastructure play in the United States, a big infrastructure business, and lots of other companies outside the banking sector that last week smashed expectations. In fact, the strong banking earnings reports last week for the third quarter is a really great guide to how the US economy is doing right now. Growth is over 6%, interest rates are zero. The US Fed is stimulating the economy with more than $100 billion a month. The probability is, guys, the US consumers are not going to stop. They're richer than ever. And when you're feeling richer, you don't question whether or not the price of something is 5 or 10% higher. You just buy what you want to buy. And if it's not available, you take the next best option. So I think right now the sentiment has shifted because of those strong earnings, and the probability is that's only going to get stronger throughout the month of October. Let's wait and see. Look after your risk management, but I will tell you, it never pays to be a pessimist in the share market. Have a wonderful week. Happy trading, and I'll see you next time.